Hello there, welcome to this video. We're going to be discussing market structure. So let's go ahead and get started because we've got a lot to cover. Okay, so first things first, understanding market structure. If it's the first time you've saw anything or any video in this particular topic, I'm going to go ahead and get started and catch you up to this. But now if you already have experience and you've already seen this drawn before, I guarantee that you're going to get some value out of this video. Okay, so first things first. As you can see here, we have basically an easy way to show that the market is basically going high and then it retraces. This retracement is called retracement or a pullback, right? Until it breaks this high, forming a higher high. So HH is higher high and then higher low. Why is it a higher low? Because it didn't break this low, right? But it formed a higher low. All right, and it kept on going to break this higher high and so forth. It moves basically in waves, and the same thing goes for the down trend, right? So we've got the price going lower, then forming a high, breaking the structure, forming now a range, creating a lower high because it's lower than this high, and breaking again the lower low, forming another lower low. Okay. And how do we determine the high and low of a pullback or a range? For instance, this is a range for when we have a low that breaks a high and it forms a higher high. From here to here is a range. Okay, so how do we determine that this is a swing? Okay, this is a low and this is a high. Well, we have a swing basically determined by 3-bar swing. It's a swing high, or a swing high is the highest high, middle of the candle, right here, the red one, with a lower high to the left. This is a lower high, and a lower high to the right. Okay, so you've got this candle right here. It has to have 3 candles. Then you have this one that formed the high, and this one that didn't go above this high. Okay, another very important key factor that I use to determine the high or swing point is that this third candle right here needs to break the bottom of the candle that placed that higher high. Okay, the highest high right here. Now this is the low of this candle. This candle can't go above this high, but it needs to break the low because now I have a swing, and basically it indicates that we're continue to go lower. The same or the opposite is true to a swing low. A swing low is the lowest low, middle candle, with a higher low right here to the left and a higher low to the right. Same example, you see that this candle made the lowest low, and then this one came and didn't break, invalidating this high and this low, but it continued to go higher, breaking the highest point of this candle. Okay, very, very important. And one quick tip here that I'd like to use as well. As you can see, we've got a lot of people selling. This is a huge candle, but there's a lot of momentum, right? So a lot of people selling, and as you can see, this candle doesn't have much volume, much momentum going down. So you can start saying that, okay, well, there's not as much interest of people trying to sell, and therefore the candle is a little bit smaller. And then when this candle right here actually goes above, now we have an interest of buyers trying to go higher. Okay, the other thing, or the next step for market structure to understand, is that price is always looking for 2 things. The first one is seeking liquidity, which is highs and lows. The liquidity is sitting at the very top or low, or to rebalance price to a PD array. And PD array, we're going to touch on that in a different video, but basically it's premium discount array. Okay, and we're going to discover or talk about what the PD arrays are. Before you continue watching this video, I want to quickly let you know that now you have the opportunity to join our Discord community, where you can have access to our exclusive content to help you learn how to day trade profitably. Besides that, you will also find other ways to have multiple streams of income and become part of a community of people that, just like you, want to achieve success. Just click the link in the description of this video or visit levelxtrade.com to have instant access. Now back to your video. So price goes from internal range right here to external range, right? So this is the external, and it comes back to the internal, the PD arrays, and then to the external, internal, external, okay? And then when it breaks the PD arrays, invalidating all these PD arrays that were here, just breaking the low of that candle, the swing that I mentioned, with force, momentum, now we have a different interest and a different interest in terms of buyers or sellers, because we were buying, and the buyers were winning, and now the sellers are winning, okay? And here's a quick review of what we were talking about. So we've got this swing low. As you can see, there is a candle to the left, a candle to the right. This one engulfed, basically broke the high of that down candle, kept on going. The same here, you have the highest candle swing to the left. We have a lower high and a lower high to the right, okay? And then basically once it breaks the high, now we switch momentum or interest. We have a pullback, breaking the high, a pullback, breaking the high without much momentum, and now it breaks or it retraces, and then here it's where it broke with a lot of momentum going high. The same thing with bearish. We're going low, there's the highest point, breaking this low point, okay? Broke this point, came here, didn't break this high, still bearish. Now if it broke here, that means we changed now who is in control. The buyers would be in control, okay? So hopefully this helps you. The next video we're going to be, or next sequences of video, or next sequence of videos, we're going to be talking about what the PD arrays are. And here's basically just in a nutshell what a PD array are. So PD arrays are premium discount. So it's when the price is, at a premium area and the discount at the bottom. And you have old high, which is one of the PD arrays, rejection block, order block, fair value gap, liquidity void, breaker block, mitigation block. Each one of these things we're going to be covering in a video, in a separate video. Okay, so because price wants to always go from internal to external, but also find a way to have equilibrium. So hopefully this helps you a little bit with the market structure. Again, it's very basic, and we're going to be discussing that into more details. Make sure to download this PDF and ask questions in our Discord. Thank you so much, and I'll catch you in the next video.